So yes, my name is Jiri Kupiainen. I'm the CEO and founder of Playfield. If you're wondering why it says Shark Punch on the brochure and why it says Playfield on the screen, it's actually very simple. Shark Punch is the name of the gaming studio that I founded. And Shark Punch released a game, we had a great time, and then we came up with this idea for a game discovery platform, which is Playfield. And over the time, we kind of stopped making games and started focusing on the platform. So we're now in the process of only talking about Playfield. But if you hear Shark Punch, it's the same thing as Playfield. Anyway, today I'm not going to talk about Playfield or the game discovery or anything like that. I'm going to talk about fundraising. So if you're a Finnish startup or a gaming company operating in Finland, where do you get money? What are the different sources? How do they work? What's the landscape like today, etc. When I got here, Oleg came to me and he said, oh my God, is your presentation only white backgrounds? So Oleg, I added a photo. That's the only photo I have in this presentation. Now it's done. Now we can go back to the boring text part. So what makes me qualified to talk about fundraising? Well, so first of all, my previous gaming startup, gaming platform, was acquired by the Walt Disney Company on its first birthday, actually, for 8 figures. And the interesting thing about that company is that it was all funded by the public funding sources in Finland. So we had no private investors whatsoever. It was all public money in Finland. And we actually, one thing many people don't know is that we actually raised a Series A funding round from one of the best investors in Europe. But we never signed the paperwork because Disney bought the company before we could do that. For my current company, we raised our seed round led by London Venture Partners, who I think are the best gaming investor on the planet right now. They've also invested in companies such as Unity or Supercell, which has been mentioned a couple of times here. I'm also fundraising at the moment myself. So I spent the last 3 months just going around the planet, talking to investors in Finland, in Europe, in the US, in Asia, etc. So I think I have a pretty good understanding of how things look right now. I've been in the games business for 16 years. So I was 16 when I joined my first full-time gaming position. And so I've been doing this half my life at this point. I also founded my first company when I was 17. And I'm also an angel investor myself, even though reality is that I think it's better for me to stick to just running companies because all of my investments have been very, very bad. So don't take my investment advice, just take my startup advice. I think one kind of common idea people have about Finland is that it's like a welfare state for start. I mean, it is a welfare state, which is awesome. You know, we get a lot of benefits we get a lot of return for our taxes. But Finland is not a welfare state for startups. So if you look at the numbers, actually Finland attracts the most private venture capital per GDP in all of Europe right now. So we get more investment money than anybody else per GDP in all of Europe. And also, like if you look at public funding side, even though we have access to really great public funding, but actually we spend a really low amount of money on that. So we actually spend less than half of the EU average on public R&D funding and less than a quarter of what the US spends. So actually, most of the funding in Finland is private. And because of that, I'm going to focus on private funding in this presentation. Before we get to that, just some general thoughts on raising money. I think the biggest thing that when it comes to raising money is that you need to understand that when you're giving away equity or you're giving away control, you are affecting your company's future, right? So you need to understand that if you're taking someone on board, if you're giving someone shares, they have goals that might not be the same as your goals are. So whenever you consider taking an investment, you have to consider like what are the goals of the investor? Because if you take money from like a venture fund, they want to sell your company or they want to go public in 5 years for 100 times what they invested. If that's not your dream, then you should not take venture funding. On the other hand, if we think about public funding, if you talk to techers might not actually care that much about your success, but they care about the kind of the growth of the ecosystem. They care about building the Finnish gaming ecosystem. So they might actually care about different things than you care about. And this is all fine, but it's a decision you have to make. It's a discussion you have to have before you take anybody on board. And I think the main thing is that usually if you can do it without taking any outside money, you probably should do that. Just go at it yourself because it's going to be a lot more simple. Now, if we talk to investors, these are the 3 classic things they care about. They care about the opportunity. And the only thing about the opportunity is that if it's not big enough, if it's not convincing enough, then nothing else matters. So if your company doesn't have the potential to be, a $1 billion company, then investors stop listening to your pitch. I mean, maybe it's going to be a great lifestyle business. Maybe you're going to have a great time, ship some awesome games. But if it's not going to be a $1 billion business in 5 years, investors are going to kick you out the door. But once you have the great opportunity, you've identified like, hey, if we do this right, we are all going to be billionaires. Well, now they start listening to you, but then the next question is, are you the right guys to seize that opportunity? So if we believe your story about this massive opportunity, why are you the right people to do it? Because if you can't answer that question, again, I'm not interested. I mean, I'm not going to invest money in a shitty team. Like you need to tell me why you understand the opportunity better than anybody else, why your team can do something with that opportunity that no one else can. They want to see track record. They want to see successes. They want to see expertise in the market you're going for. And this is really like, if there's like one thing that investors really care about, it is always the team. If the founding team is not convincing, then nothing else really matters. And of course, the third thing is traction. And this always depends on the stage your company is in. So if you're raising like, angel money, you don't really need much traction. You need like a nice pitch deck or maybe a nice demo. But when you talk to, Series A investors, they want to see a scalable business model. You need to demonstrate that there's a great opportunity, there's a great team, and you need to show that you're actually doing something with that team and that opportunity. Now, when it comes to actually, reaching investors, like getting the first meeting, pitching them all that, I think there's three things that you have to have. First one is like just the first line of the email. Like, why should I read the rest of it? Like, hey, we are the guys who sold our previous company to Disney in 1 year. Here's our next company. Are you interested? Well, yes, I am, because that sounds like a cool thing. It doesn't matter what it is, but if your first line doesn't hook them, then nothing else matters. The second thing, which I think is sometimes kind of tricky for Europeans, Americans are very good at this, we are not, is introductions. So if you think about like a normal, successful, good investor, they get 100 emails every day, asking for money. And they're not going to read most of those emails. But if the email comes from someone they trust, suddenly they care more, because it's been vetted by someone that this is actually good stuff. So I would strongly advise against, just going to Slush and setting up a booth, even though that might work. I mean, go to Slush. Slush is great. But before you go there, identify the investors you want to talk to. Find someone who knows those investors and get them to introduce you before Slush, because that's how you actually get the meeting. And finally, I think the only key to having a great investor pitch is iteration. Just keep doing it, because we get a lot of compliments on our investor pitch, which is great. I would prefer money, but compliments are nice. And the reason the pitch is good is because I've done it 50 times, and I've done it 100 times. I don't even know anymore. And every time I give the pitch, I listen to feedback, I change it, and next time it's better. And you do that over and over again until you get to the point where you only have good stuff in your presentation, and that's when you get the investments. Now, of course, investors are like lemmings. They don't know what's happening. They don't really care what's happening. They only care about what are other investors investing in, right? So they're lemmings. One of them decides to run off the cliff. They all run off the cliff, and they're having a great time doing it, and then they're dead. But that's how it goes. So we've seen this over and over again. Like all investors always care about the same things at the same time. And I think right now, if you're pitching esports, you're pitching VR, you're pitching an esport VR experience thing, a lot of investors will care. But it's funny how this changes over time, because 2 years ago, if you were pitching a PC gaming company, no one cares. But today, if you pitch a PC gaming company, well, because investor A invested in a PC gaming company, investors B, C, and D also want to invest in PC gaming. So just kind of look at what the top investors are putting their money in, because that's what all the other guys are also going to put their money in the next half a year. There's other opportunities that I think are possible. There's because Twitch was successful, you see investors being interested in live communities, gaming culture. Because esports is big, then of course probably betting is big, because if there's sports, there's always betting. Platforms might be interesting, because investors know the economics of games and the fact that most game projects fail. So if you have a platform instead of one game, maybe there's a better chance of you being successful. Some things that are not popular with investors right now are game studios, because all of these guys, they've invested in a lot of gaming studios, and I think we reached the peak a couple of years ago. Now all of those guys are just waiting to see which ones are going to be successful. So if I was running a game studio, I would be terrified right now. If I was running a mobile gaming studio, I would be terrified to talk to investors. I mean, it can still be done, but you need to have you have to have that intrigue. There has to be something special about your dream. There has to be a great team. But it's also good to remember that actually companies that might look like gaming studios, they might actually have long-term plans that are something totally different. So I think Best Fiends was mentioned once. I mean, Best Fiends, seriously, is a game studio, but really they are aiming for something a lot bigger. So, and they have an experienced team, so they still get funded. They get nice funding round, even though it's just another mobile gaming studio. But I think right now in general, I would steer clear of mobile gaming studios. That's just reality of this. Now, if we look at the kind of different types of money you can get, well, we'll start from the bottom. Angel investors. So these are independent guys who, you know, they have some spare cash. They throw it at things they like, and that's all fine. Now, the reality is that these guys don't really have much money. And if you think of your company on like a 5 to 10 year time scale, the money that an individual angel investor is going to put in is nothing. It's a rounding error. So if you look at angel investors, I would not focus so much on the money or the valuation or anything like that. I would focus on what are they going to enable. So do these guys know bigger investors who will invest in your next round? Do these guys know the market better than you? Can they provide advice? Because like you're going to be living with these guys for the next 5 years of your life. So if they don't contribute anything besides money, their money is not significant enough to have them on board, and it's really hard to get rid of them later. So this matters. I think Finland is in a good situation right now with this because we have a lot of people who know gaming. We have a lot of people who have founded gaming companies before. We have a lot of people who used to be early employees at gaming companies. And especially if you look at Supercell right now, it's not that hard to kind of draw the conclusion that in the next couple of years there's going to be a lot of people who know gaming startups, who have a lot of spare cash that they might want to invest. So if you're looking for angel investors, maybe now's a good time to start hanging out with Supercell employees, because maybe in a year or two they will be the guys financing your startup. Early stage has been very active in Finland. A lot of Finnish gaming studios have raised a lot of early stage money. The cool thing about this is that these guys actually bring in a meaningful amount of cash. So if you can raise 200,000 to 2 million, if you keep your burn rate low, you can actually do a lot of stuff with that if you're smart. And another good thing is that usually these guys are institutional, so they have a pipeline. They have a plan for you. So if you're serious about growing a big business, early stage investors usually know how to get there. They know what you need to say, what you need to show to be able to raise a Series A. Now, of course, the bad thing is that these guys know nothing about your business. And, from a founder's point of view, it's easy to go like, oh, wow, like these guys, they've been investing for a long time. I should listen to all of their advice. Most of their advice is going to be bad because they don't know anything about what's unique about your product, your business. And I think it's important to realize that these guys will be sitting on your board. They will be giving you a lot of advice, and most of their advice can be bad because there's something unique. There's something unique and new about your business that these guys haven't seen before, and they will assume it's like everything else, and they will give you advice that doesn't hold anymore. Now, as I said, like in Finland, this funding has been available. This is still very easily available. But because the next stage of funding is getting harder, we see that a lot of early stage investors are now being more careful. So they want to see more proof that you have something valuable, something that you can actually scale. So it's still easy to find people who are willing to put money in your company, but you need to show a lot more than you had to show like a year ago. They want to see actual numbers. They want to see a real business plan instead of like a 10-page PDF that you just threw together on the plane. Now, growth stage. So we're talking, big money. We're talking millions of euros. The thing here is that, well, there's good and bad. So European growth stage investors, many of them have raised massive new funds. So these guys are sitting on, like millions and millions and millions of euros. And the good thing is that they have made a commitment to their investors that they will invest all of this money during the next 5 years. So during the next 5 years, there's going to be a lot of growth stage funding available. Now, the bad thing is that, well, as I said, investors are like lemmings, so they follow each other. And what happened last year was that the Americans, the US-based investors, decided all to stop investing. They said, okay, you know what, valuations are too high. We don't like this. We want cheap companies. So basically what they said is they're going to take a break from investing. They're just going to wait and see, let half of the companies die off, and then invest in the good ones at a discount. And then European investors went this year. They were like, oh, hey, that's a great idea. Well, I also want to get cheap investments in great companies. So hey, we should also stop investing. And now the reality is that if you look at Western investors at the growth stage, like no one is putting money in. They're all just waiting for someone else to do the first investment. So I guess my advice is that if you're a company talking to Western investors about a growth a Series A round, you should wait because they are waiting, but they can't wait that much longer because they have promised to invest all of their money during the next 5 years. So if you can kind of make your company last for a year longer, then you'll be in a great position. Okay, public funding. I'm actually going a bit faster than I thought, which is good. Tekes has been mentioned many, many times, and I think we've heard good and bad things about it. My personal experience is that Tekes, so the national R&D funding agency, is awesome. So if you have a company operating in Finland, I wouldn't bother looking at any other sources of public funding. And like for you guys, of course, the relevant things are, but first of all, you don't need to be a 100% Finnish company. Like you need to be operating in Finland. You need to have a significant presence. So you should have an office. You should have a plan to grow your presence in Finland. But you don't need to be 100% Finnish to get full access to Tekes funding. I mean, our company is part American, and we are fully getting all the Tekes funding we want. The way Tekes works is that it's a mix of loans and grants. So depending on your company situation, depending on the project, depending on a lot of different things, you will either get a grant, which is just they will give you money and that's it, or they will give you a loan. But even the loans are on very, very friendly terms. So I wouldn't worry about whether it's a loan or a grant too much. I mean, it's still all free money for you to spend. Now, of course, the bad thing about Tekes is that you first need to spend that money. So you can't just walk in there with a hat and go like, okay, give me your cash. Like you actually need to spend the money first. So that means that you need to get some private investment, spend the money, and then you can go to Tekes and get half of it back, for example. Tekes funding goes from thousands of euros to millions of euros. So it actually scales with the company pretty well. There's a thing called NIY, Young Innovative Companies Project, which gives you access to in excess of €1 million in grants, and also has nice terms. So it allows you to operate on a very flexible basis. And I think today, when it comes to Finnish companies, all investors that invest in Finnish companies expect there to be Tekes support as well. So expect to have an answer to that. If you have a Finnish company, you pitch to investors, they will ask you, like, why the hell aren't you getting money from Tekes? And I mean, that's a good question. You should, because it's there for the taking. There's other sources. So if you happen to move to Finland, you find yourself unemployed, which is very sad. There's ELY-keskus, which are these like regional agencies that basically can fund your personal expenses for a while. So if you're unemployed in Finland, you want to start a company, these guys might give you, 500 euros a month. But obviously this is not company level funding. This is probably not appropriate for any of you guys. There's AVEC, which funds multimedia projects. You can get maybe 20, 30K in euros for a demo, for example. Might be worth it, might not, depends on the situation. And then I hear rumors that the European Union is funding a lot of things, and I'm sure the rumors are true. But as some of you know, the EU is pretty complicated, pretty bureaucratic, to a point where like I have no idea how to apply for this funding. So if you find out, then please tell me, because I could also use some of that cash. Right. So anyway, yes, we're talking about Finnish gaming ecosystem and all that, but I mean this is a global business. Investors are global. Everything is global. So I spent the last 3 months talking to a bunch of people in different places around the world, and I'm seeing a couple of things that, I mean, obviously aren't always true, but I think are kind of decent generalizations. So if we look at European investors, first of all, they will never say no, but they will also never say yes. So you can spend a year going, like, oh yeah, it sounds great, like, well, let's talk in a month. And it takes a lot of work to get an European investor to say, like, yes, this is great, we want to fund you. Whereas if you look at Americans, it takes a day. They will go like, oh, this is great, we're going to do this, yeah. Or they're also like, no, I don't think the opportunity is for us, so thank you. But the good thing is that you get that decision right away from the Americans. From the Europeans, you don't. Another difference between Europeans and Americans, valuations are low. So if you raise a funding from a European VC and you raise a Series A, well, to the US investors, it's going to look like a seed round. So there's an opportunity for getting a lot more money from the US-based investors. But often it's easier to work with local investors. Even though the valuation is lower, it might still be better for your company. So I would consider, like, do I actually need that much money? Or am I going to get more work done with less money with people who are actually available to me? European investors have done good gaming investments. They know the scene. They know the industry. They have connections that can help you. Americans have done pretty bad gaming deals. Most of them invested in Zynga. That didn't work out, so now they're all really like miserable and they don't want to invest in gaming ever again. Whereas many European investors invested in Supercell and they're all very happy and they want to invest in more gaming companies. I guess a couple of things to consider is that, well, first of all, if you look at the European map and you see, there's this core, there's Germany and Austria and Switzerland. And it kind of feels like these guys in the middle of Europe, they want to stick to their own stuff. They want to only deal with people who also speak German. Whereas if you look at investors from the Nordic countries, if you look at investors from the UK, maybe from Russia, from Israel, they are a lot more open to working with people from all over the place. So I personally haven't had any success working with investors based in Central Europe. And of course, your mileage may vary, but usually it's not worth the time. And then, of course, one interesting thing is that the Brits had a vote last Friday, and of course, all the biggest venture funds in Europe are based in London. So this will probably reduce anyone's chances of getting funding from the Brits right now because they don't know what the hell is happening in their country. So it's just good to consider that. If you're talking to a London-based investor, it might take a while for them to know what they are going to do next. Finally, I think the biggest opportunities in fundraising right now are actually in Asia. And Asia, there's a lot of interest in gaming. There's a lot of money. The only thing to keep in mind is that there's not that many independent venture funds in Asia. Most of them are strategic investment arms of a major corporation. So that means that if they give you money, there are strings attached. There's a corporate strategic reason why they gave you that money. And this is, again, one of those things. You need to understand what are the goals of the investor and make sure it matches with your goals. Because otherwise, they will push or pull you in a direction you don't want to go. And because they're sitting on your board, you can't do much about it. But I know for a fact that there's several very big Asian companies that are very interested in Finnish gaming companies right now. We see people flying in every week from China, Japan, and Korea and asking for new Finnish gaming startups they could talk to. So if you see potential in the Asian market for your business, I think Helsinki is a very, very, very good place to be right now. So yeah, if I had to kind of sum this up in how to do this stuff, I would set up in Finland. We have great access to early stage funding. Tekes is awesome. We have a great ecosystem. I would raise my early stage round from Europe because those guys are accessible. They like to do early stage. And then I would forget about the Europeans, forget about the Americans, and go to Asia and raise 100 million in funding and build the next Supercell or whatever it is you want to do. And that's actually it.
Thank you very much.